Joe Wood. I started Satoshi Pacholi about 3 years ago now, really with the focus on providing accounting support for Bitcoiners, with a lot of Bitcoin startups in the space, kind of filling that need for someone who was knowledgeable about Bitcoin, but also had an accounting background. So that's kind of my background here, real high level. And these are kind of the high level topics that we want to talk about today. If there's stuff on here that you guys want to dive into more detail, feel free to drop those questions in there. And then we'll also have time at the end here that we can kind of go over anything I didn't discuss. We'll start accounting treatment for Bitcoin. That's kind of one of the first basic questions we get of like, hey, I want to accept Bitcoin. I want to use Bitcoin for payment. I want to hold Bitcoin. How does that change my accounting treatment? So we'll cover that. And then the other big thing that you see a lot of right now, a lot of it talks about public companies is, hey, I want to hold Bitcoin as my treasury asset. What does that look like? How maybe that varies for smaller companies compared to some of the bigger companies that you hear about. So we'll cover that. Should you use Bitcoin as payment? Does that complicate things? We'll get into some nuance there. And then what are kind of the areas of, if I'm incorporating Bitcoin into my business, how does that make the accounting harder, and kind of some ways that we can get around that. And then some of the tools that are out there right now in the ecosystem, that will be an evolving process. A lot of it, I think there's a lot of stuff being built right now in the next year or two, but we'll kind of cover some of the stuff that's out there right now. And then, like I said, we'll leave some time at Q&A at the end. So yeah, we'll start off accounting treatment. Real high level here. You don't really need to know about this too much because it's been changed, but previously, it's kind of actually the start of this year officially, Bitcoin was treated differently by the FASB, which is essentially the accounting governance board. And essentially what that did was it make it so you could only reduce the value of the Bitcoin if the price went down, and you could never increase it back up. Doesn't make a lot of sense. We don't really need to get into the details of why that was the rule, but that's recently been changed. And so Bitcoin is valued on a balance sheet like any other asset that you were to hold there. Price goes up, you increase it, you have an unrealized gain there. Price goes down, you have a unrealized loss there. Maybe one of the important things to cover there is that doesn't affect the taxability of it. And so some people have talked about, hey, price goes up, am I getting taxed on that? That still only has a tax effect in the US, at least, when you actually sell the Bitcoin or spend the Bitcoin. And so we'll get into that as well. But no inherent tax disadvantage to holding Bitcoin there if you're not selling it. And then the other kind of question is, hey, if I want to receive Bitcoin as payment for goods or services, how do I value that? And it's really pretty straightforward. At the value of the Bitcoin in US dollars at the time that you receive it, that's going to be the amount that you record in your books as your revenue, for example. So if you were to sell something and it was $1,000, you might receive Bitcoin for it, you might receive USD, but you're still going to value it at that $1,000 on your income statement for the year. So real high level there. Any questions on any of that before I go to the next slide here? Nope. All right. We'll keep on running here. So the next big thing that people will talk about is, hey, I want to hold Bitcoin. I'd rather hold Bitcoin than US dollars. Obviously, Michael Saylor has talked a lot about that with MicroStrategy. MicroStrategy is in a unique position there where most companies are. So we'll kind of talk about it more from a startup perspective, or kind of more your small business perspective there. I think a few factors to consider if if you raise funds, for example, like what is your appetite to the price risk there? One of the issues with Bitcoin startups, especially, is, if you're going to go out there and raise funds, your ability to go and raise funds is also probably tied into the price of Bitcoin a little bit, right? So understanding how your business is connected to the business, the Bitcoin price cycle, and so that you're not putting undue risk onto the organization where like your mission and your goals are going to be impeded by you get an unexpected 6 month price decrease in Bitcoin, and then the runway that you thought you had is no longer there. If your business is not affected by the Bitcoin price in the same way, that's less of an issue. But I think you want to keep that into account of if price goes down and your business revenue goes down at the same time, you're going to be in a more extreme position than someone who's only exposed to kind of part of that equation. Next thing I have on here is, if you're a startup, you raise funds from investors, you probably want to have buy-in from investors as well. If they're Bitcoiners, if they're Bitcoin VCs, for example, and they would have the money in Bitcoin anyways, you probably have a lot more flexibility there versus someone who is interested in your company. You think you have potential, but maybe they don't have the same level of conviction about Bitcoin, and they see a 50% drop and they're like, hey, I gave you this money. You said you were going to do A, B, and C. And they might be less understanding of kind of that price movement. So be aware of who you're accepting money from and their understanding and their acceptance of that volatility. And then, yeah, another piece here is just around if you have expenses that are paid in Bitcoin already. My business, for example, pays some of our contractors' employees in Bitcoin, and so if you're going to be paying people in Bitcoin already, that kind of built into it would make sense to just be holding that already. The price volatility is less of an issue because I'm going to be using it next week or next month, for example. And so I think that's important to think about as well. If you already have expenses denominated in Bitcoin, certainly, but even just that are going to get paid out in Bitcoin, you don't necessarily need to go and buy it right before you're sending it out. You kind of hold that already, and just makes the process a little more streamlined. And then this is a thing that I think is probably relatively new, at least on my radar, as far as thinking about. Obviously, we know Bitcoin's volatile. We know that has to be factored into how much you're holding. But the potential for bank failures, or certainly with Bitcoin startups, is potential for a bank to come and say, hey, for whatever reason, the activities that you're involved in, we don't want you to be a customer. That can obviously cause short-term, complications in your business. And so having that as, maybe you have 80% in US dollars and you have 20% in Bitcoin. But, because you have that 20% in Bitcoin that you can use and access at any time, and you don't need anyone else's kind of permissions on that. That's a huge value add, I think, when you consider the fact that the bank might decide not to serve you as a customer in the short term, or more extreme, like we saw, a couple years ago, year and a half ago. If you are subject to your bank just shutting down and not having access to your funds, having Bitcoin is obviously a very different situation there. So kind of covered a lot of that high level on treasury. So yeah, we get this a lot. We work primarily with Bitcoin companies, and so a good percentage of them are holding Bitcoin as treasury. But a lot of them are still hesitant to use Bitcoin as payments. And so that's kind of an evolving process there. But I think there's probably a few key cases there. One is around international payments. You could send international wires all around the world and everything, but every country is a little bit different. And so Bitcoin, obviously, it doesn't matter where you are in the world, you can send a payment to that person, in 10 minutes, for example, right? So that's a nice and unique factor. I know OpenSats, for example, probably has the most extreme case of this right now, where they're literally sending dozens of payments every month to people all around the globe, right? That's not the main use, or the main case right now. but like bigger international businesses, I think will come to this. But if you're a startup, if you're working with people in other countries, Bitcoin may be a lot easier option there to make those payments than an international wire that can take several days. You know, yeah, from when you send it, complications as far as getting the right bank information from them. So I think that's a great use case. And then some of your employees or contractors might just prefer to be paid in Bitcoin. And so that's kind of a pull mechanism of like, hey, if that's going to make them more satisfied as an employee, you're going to get better work out of them, and you're holding Bitcoin anyways. Why not use it and pay contractors in that way? We can get into the accounting side, I think, which is the next slide here, where there is some complications there, but like if you value your contractors, you value the work that they're doing, paying them in the currency that they prefer, I think makes a lot of sense for you. So yeah, we have essentially a couple of things here as far as complications. I hesitate to call them complications, but um, basically around if you're selling Bitcoin or using it as a payment, that is in the US at least going to be a taxable event, right? And so each time you spend Bitcoin, technically, there'll be a realized gain or loss compared to when you acquire that Bitcoin. And you could have acquired that Bitcoin from an exchange, so you'd have the purchase price when you acquired it, or you could have received it from a customer because you're receiving it for goods or services, and that would be your cost basis. But either way, there, the Bitcoin that you have that you're using as payments is going to have a realized gain or loss on it. And so sometimes people get hung up on every time I, send this payment, I got to go through and I got to record this realized gain or loss. It's not quite that bad. I mean, realistically, you can do that on a monthly basis, a quarterly basis, add those up. If you use payment Bitcoin 5 times or 10 times or 20 times, you can take all those transactions together, throw it in an Excel file, get your gain or loss, and record that as one journal entry on your accounting side. And so it doesn't have to be an overly complex process where every single time I'm spending Bitcoin, I'm going in there and doing that realized gain or loss calculation. And then the other thing, which is people mostly focus on the tax side, but I think there's some interesting opportunities, but challenges for Bitcoin on the kind of internal control side, especially when we get into custodial versus non-custodial options there. The kind of the traditional banking system there is all non-custodial, right? Like the funds are sitting at your bank. You go and tell them where you want the money to go, and they kind of do it for you, right? And so those options will be available in Bitcoin as well. And so that can kind of mirror the current system a little bit more versus if you want it to be non-custodial, even with a multi-sig, whoever's holding those keys have the ability ultimately to move those funds. And there's no pullback, there's no drawback. This is not Ethereum, right? Like once the money's gone, it's gone. And so like trusting those people that are holding those keys becomes really important. A lot of the businesses that we're working with today, it's not a huge issue in that you might have 2 or 3 founders. And so like they're very invested in it, and it's mostly their funds they're working with, right? And so they're incentivized to use those funds for the business. But I think that gets more and more complex as you get bigger and bigger organizations and you're trying to use Bitcoin non-custodially. Who has control of those keys becomes really important. So I think that will be a challenge that most people will just use custodial options, I think. But I think there'll be more better non-custodial options here kind of in the years to come as those products evolve. And that, yeah, just kind of gets to the fact that Bitcoin's a bearer instrument. And so it is closer to, whatever 50, 100 years ago where people would hold cash or have petty cash like in a lockbox somewhere. But it's essentially that, except for you can send millions of dollars over the internet, right? So a unique challenge there. I think when we think about businesses using Bitcoin and payment and kind of interacting with it. Um, and then I just have some tools here, kind of as our last slide. You guys are probably familiar with Zapwrite, based out of Austin there. They've been around for a little while now. Really great, easy way to receive payments. And this goes back to kind of the first item I was talking about, regarding, hey, when I receive Bitcoin, for goods or services, how do I track that? How do I get that cost basis? How do I get my revenue on that? And Zapper makes that really easy where everything can be in one place. I can have obviously the US dollars that come in, but then also the Bitcoin that comes in. And so that's all in one place. And I can go back and, if I want to spend that Bitcoin at a later point in time, use that data, to record those gains or losses there. I have a link here as well where we're working on this as a company. Probably has some work to do still on it, but trying to build out a sheet. It's a Google sheet or an Excel template. We have two options on there at that link. It's primarily built out right now for individuals, as far as realized gains and losses. But I think there's an avenue there for businesses to use it as well if they are transacting in Bitcoin. And then relatively new process. I think they were part of your top builder last year. And yeah, Clans.tech, they're essentially trying to build out a full accounting suite based on your Bitcoin transactions. And so obviously you're still probably having the fiat side, at least for a little while now. But to the extent that you can plug in your accounting, your wallets, whether it's I think they have lightning wallets, they have on-chain wallets as well, and so like connecting those into their software and having it essentially put together an income statement or balance sheet for you. That's kind of the goal there. I know that's still a work in process for them, but if you are primarily operating in Bitcoin, I think it's probably a great option to check out and kind of can simplify some of this stuff. And then, yeah, we talked about banks earlier, potential for, hey, they hear you're working in Bitcoin, they don't like it, they shut you down. Maybe that fear is less of an issue now this year, but probably something always to keep an eye on. And so, what we've seen from clients, we've heard good things about Mercury and Brex. If you're looking for banks as a Bitcoin startup, I'd probably start there. Haven't heard a ton of horror stories there, and they seem pretty open to Bitcoin as a customer base. Um, so yeah, we have that, and then I just have this last slide for questions. We have Twitter, Nostr, email. Feel free to reach out to us on that. But I think from there, we probably just want to open it up for questions and see if there's anything that you guys wanted to dive into further, or anything I just didn't cover at all that you had questions about.
Joe, thank you so much
Yeah,
for spending time today from your Saturday. I know you're extremely busy, especially this
yeah.
time of the year. So, thank you so much, and then thank you again for just supporting the builders and the ecosystem with all your knowledge. And yeah, just so the builders know, PlebLab uses Satoshi. How do you say? I always get mixed up with the end.
I always
Pacioli,
say Pacholi. A lot of people
Pacioli.
say
Yeah,
Pacioli.
I always say
Whatever you
Patrioli.
want to say. Yeah,
But yeah, we use him, and Teresa's a big fan of everything Joe does, and so if I wouldn't recommend anybody better personally, and I know he helps a lot of companies out there in Nashville, so it's going to be super bullish on where you're going and how big your own company is going to be one day.
yeah. No, I appreciate that. Yeah, it's great to get an opportunity to talk to some of the people that are building the next things to see in the space. I know you guys had a great group out there last year. Excited to see kind of what comes out of it this year as well.
Yeah, it's going to be a lot of fun.